Hi. Okay. Capital Races Club, take two. We have with us today Mitch Messer. So, Mitch is the guy that got me into investing in real estate in the American market. So, 2 years ago, 2020, as we met Mitch Messer on, first of all, we met you on Bigger Podcasts, Cecilia and I. We joined your group, Skill Setters group, on Facebook, and have ever since gotten to learn from you with so many hundreds of others investors. So, without further ado, please welcome Mitch Messer. I'm very, very happy that we have the opportunity to learn from you today. Thank you for being here.
Well, Sam, thank you for having me. It's an honor and a pleasure to be here, and I am excited to see so many friendly faces and icons in the comments. So I'm looking forward to a good conversation.
Beautiful. All right, so let's start with your story. Where did your real estate journey start, and would you like to walk us through that a little bit?
Sure. So my wife and I got started real estate investing in 1999, which sounds like 100,000 years ago, back in Metro Atlanta. We started off as buy and hold investors. We acquired real estate, put a tenant in, did pretty much exclusively lease purchase, and did really, really well. We had accumulated between $6 and $10 million in assets just in time for the Great Recession, 2007, 2008. And we got thoroughly, utterly spanked, crushed, devastated, and learned some painful lessons, many of which I try to pass on to investors as they get started now. So from 2008 to about 2014, we were licking our wounds, learning our lessons, and trying to get grow back better. And nowadays, I work with mostly overseas and out-of-state investors who are looking to do what we did, which is build a portfolio of rental property here in the United States. I also work with a lot of investors who are just getting started, who are trying to break into the real estate business. And I try to have them avoid the painful mistakes that we made getting started, of which there were many. And I love what I do, and I love the fact that I can attempt to follow in your footsteps and travel the world. We just got back from 2 weeks in Panama, and I loved it. In fact, we're already talking about where we're going to go next. My wife and I were driving back from Tulsa yesterday, and we're like, okay, what's next on the menu? And we don't know yet, but it'll be somewhere soon. So that's my real estate background. I'm an engineer by training. This was not what I went to school to do. I worked for AT&T, Bell Labs for years before I started doing this. And it's not surprising, there are a lot of engineers in real estate, a lot of engineers and nurses for some reason. And I think it's because my theory is that it's because those are people who get stuff done. If you want to get something done, talk to an engineer or a nurse. They're used to getting stuff done. But that's my background, and I love what I do, and I love working with people that I am working with, and I'm happy to share what I know.
It's mind-boggling how much you've gotten done since the 90s, and I hope we can get to unpack some of it today. Sure, we're going to have you maybe come on for several times by demand. And for anybody who's watching this live right now, definitely feel, or also in the replays, definitely feel free to put in the comments on YouTube, on Twitter, on LinkedIn Live, wherever you're watching this from, any questions that you would like to us cover later on in the interview. We're going to cover those. Until then, hey, Mitch, you said that during the financial crisis, 2008, that devastated you. Would you like how you climbed out of that? Because most people that got through that experience are now equipped with something that most new investors can't comprehend, me included. So I started in 2012. So would you like to unpack what kind of things did you see during the crash, after the crash, and what helped you get out of that financial stress?
So I'll start with telling you what we did. One of the many things we did wrong, but probably what I would consider to be the number one thing we did wrong. And that is, and I say it I'm not proud to say it, but and I'll use myself, I did not know my numbers. I did not understand how rental real estate works and how the analysis should be done. And so when we acquired properties, what we discovered is that after the fact is that our margins were razor thin. We didn't have the cushion in case things went sideways. And when they did go sideways, it dragged us down. Um, at the same time that we were being dragged down, there were people who crushed it. I mean, in a good way, in 2008 and 9. And I watched those people while I was hiding in the bunker, licking my wounds and trying to survive. There are people who did wonderfully well. Those are people who understood their numbers. They understood this is a great opportunity to buy, and they went out and they bought like crazy at pennies on the dollar, and they made fortunes. So, had I known then what I know now, I could have participated in that and told a very different story than what I tell now. And so that's why I tell people now, because I see some of the same mistakes being made. People saying things like, "Oh, don't worry about the analysis. The market always goes up, and you'll be fine if you just do these things for the next 2 years. The appreciation is what's going to save you. Don't worry about the cash flow. Oh, do negative cash flow or zero cash flow deals." And I'm sure people told me not to do that and not to do those things back in when we started, and I didn't listen. And I'm sure the people that I talk to now aren't listening to me either. But it's a cycle, right? I mean, people don't understand that it can't go up forever. Nothing goes up forever. Everything that goes up, and I'm not saying that we're going to have a crash, but we are definitely going to have an adjustment. We have to, by definition. That's the way the cycle works. And so the people who are buying indiscriminately and they're not using good sense and they're paying $40,000 over appraisal as an investor. I mean, as an owner occupant, that's fine. If you really want the house, do what you got to do to get the house. But if you're buying as an investor and you're paying ridiculously high prices that just don't make financial sense, it's only a matter of time before you're going to experience the pain. And I see a little bit of that now. I hope I'm wrong, but I won't be wrong forever. I mean, eventually the market is going to turn, and it'll be curtains for the people who are making bad financial decisions. The market doesn't care about your excitement and your euphoria. It is what it is, and it operates the way it does. And these cycles are there because that's the natural order of things. And so you can't escape the reality of a business cycle.
As sound advice, how would you say we can protect ourselves from those market cycles? You pointed out a little bit of getting more confident with your numbers.
Knowing your numbers, understanding when we got started in 1999, it was just after the .com crash. So the stock market had collapsed in on itself in 1999, and a lot of that money flowed into things like real estate, which is part of what helped support and buoy the real estate market from 1999 to 2006 and 7. What I recommend people do now is be aware of where we are in the cycle. If you don't count the COVID-related blip, we were up until then in the longest expansion cycle in U.S. history. It's a safe bet that we're probably not going to see another one of those in our lifetime. And so people who are chasing after that, expecting the party to last forever, we had a pretty good run. I mean, we had the longest run ever in the U.S. How much more can you ask for? It's time for the market to take a breath and exhale and adjust. And it doesn't mean you can't make money. There's plenty of money to be made when the market adjusts. If anything, you could argue that right now, the fundamentals of this market are very different than the fundamentals of 2007. In 2007, there was an oversupply of housing. There is not an oversupply right now. There's a massive shortage of housing, and there has been for quite some time, particularly affordable housing. So if you're in the business of providing affordable housing, this is a wonderful time to be a landlord. It's a wonderful time to be a rental property investor because people need it and they can't buy it on their own, and the rental stock is short. It's hard to find. So rent prices are going through the roof. Things that we rented, we have a I think it's a 3.2 in a not a particularly great part of Georgia, Metro Atlanta, that I remember being happy to get $895 for that thing. It's going for $1,900 a month now. Same house, same neighborhood, same everything, but the market has changed that much. The shortage is real, and it's going to continue for a while. So, in that regard, people can make money just fine right now, but they're not going to make it the same way that they made it 10 years ago. You're not going to make it necessarily betting on appreciation. The name of the game right now, in my opinion, should be cash flow.
When you're talking about cash flow and running those numbers, and you also mentioned briefly on the topic of raising money from abroad or having international investors also acquiring properties, could you walk us through some examples of, hey, this is an investor, they're looking to invest. This is normally how it looks when you're starting out in the market. This is what you need to be confident in before you can even consider putting any money into that deal. Would that be a great?
Let me give you an example. Let me give you a real life example of an investor that we started working with 8 years ago, maybe 9 years ago. You know him. I won't use his last name for privacy, but his name is Richard. He is operating out of Namibia, although he is a Scot, but he's living in Namibia, and he wanted to build his portfolio in the U.S. He and I started working together about 8 years ago, and he has acquired since that time a good number of quality rental properties, but because he's a foreign national, he doesn't qualify for U.S. bank financing, at least not the good stuff. He can't get FHA, he can't get VA, he can't get USDA. So he's got to be creative. And what we did with him was we introduced him to the beauties of seller financing, how you can buy property without going to banks. I tell people that in the 22 years that we've been real estate investing and have accumulated, we bought and sold tens of millions of dollars worth of real estate. We have never once gone to a bank to get a mortgage to buy a rental property. Not once.
1 second, please. I don't mean to cut you off, but this is a huge thing. I think most people won't realize what you just said. You said you bought how much real estate without going to a bank?
Millions, tens of millions of dollars worth of real estate without going to a bank. And not only did we do it, it's not even unusual. There are plenty of people who do it. It's just you don't hear about it very often. Obviously, banks don't promote the idea. And so when people come to me and they say they want to be a real estate investor, almost always their next sentence is, and here's how much money my mortgage broker said I can qualify for. And I think to myself, you could go that route, but did you realize that there are ways you can acquire real estate that don't involve going to a bank? Perfectly legal, perfectly legitimate, closing with an attorney, all that stuff, but just don't involve going to a bank. And never or rarely ever are those options even explored by most investors. Most investors jump in and start talking about borrowing money, and it doesn't make sense. So I apologize. I am I'm right now in Tulsa. I'm in a shared facility. A part of the Tulsa remote program that I'm in, I get a feature is I'm part of an office, a co-working space called 36 North. And I'm in a conference room and someone's trying to get my attention and I'm trying to communicate to them that I'm on a call. Come on in. Yeah, sorry. So I couldn't talk to you because I'm on a Zoom call, a live broadcast. He needed to get into the room. Sorry about that. So my live. Is that, yeah, exactly. We're definitely live.
For 1 second, I can just pick with the audio a little bit. 1 second. I hope this works. Internet. Okay, so for those watching this live, this is a perfect segue to actually, if you have questions, when you have questions, definitely put them in the chat. We will get to your questions later on. Today is going to be super value packed, and you can contribute with your questions at any time. If it's during the live or during the replay, all the better. Just put the questions down in the comments. If you're watching this on Twitter, YouTube Live, or LinkedIn Live, please interact, and that way we get more out of the interviews. So, Mitch, you're back. I'm glad that we got that worked out. We're gonna circle back to the whole Tulsa remote and why you chose that. But you were talking on the topic of instead of going to the bank, the traditional route of getting a mortgage, you said that you bought millions of dollars of worth of properties over the years, going a different route. How did you learn about that? Where could people learn more about that?
So,
People
and yeah,
attorneys.
I make it clear to people I didn't invent any of these concepts. The people that were teaching this stuff in the late '90s when I learned it, I had been doing it for years, if not decades themselves. Seller financing is you can Google search seller finance and get information. You can go to Bigger Pockets. You can join our the skill set group on Facebook, and we talk quite a bit about seller financing. So there are plenty of resources for getting that information, but people need to understand that it's real, and that's usually the hurdle. Is that and it's funny. It's even more of a hurdle for folks who are outside of the U.S. because I remember talking to a lady from France, and I mentioned, oh, maybe the seller will take back, some portion of the equity. And she's like, what are you talking about? And I'm like, seller financing. And she's like, we don't have seller financing in France. That's not a thing. And as I discovered, it's not a thing hardly anywhere. Pretty much the U.S. is the only place that I've come across that actually not lets, but that where sellers can take a portion, kick their equity in terms, this much down and this much over time. So that's not a thing anywhere else. And so the idea that you could buy properties that way blows people's minds outside of the U.S. Um, and that's just one strategy, right? There's also private money. There's so much private money that's desperately trying to find a nice, safe home in the U.S. And all it's looking for are transparent, honest, competent people to help them put that money to work, as you know, Simpson. And if it can find that, there's a never-ending stream of funds looking for investments. And you think that it wouldn't be that hard to find honest, transparent, competent people in the US, but apparently it's harder than you'd think. And so when those folks do find someone like you or I who is actually all those things, they bring their friends or neighbors or relatives, their dogs, and you have more money than you know what to do with. I'm talking to people from Israel and Australia and Namibia and South Africa. I mean, the list goes on. And the reason is not because I'm such a great guy, although I'd like to think I'm a decent guy. It's because if you look at their currency situation in places like Argentina, where it's 30% inflation year over year, they need desperately to get their money out of that country and into the US, where they can buy investments that throw off dollars instead of pesos, which protect them in that exchange. And so they're desperately, they're not investing because they want to or because it's kind of fun. They're investing because every day that they don't, they're losing money, actual money. They can calculate how much money they lose every day that they don't get dollars, get the currency out of their local currency and into dollars. And so the only way they can do that is through people like us. We just have to be visible. And I'll just take this quick detour to say that the best way to be visible that I found, and I found it only in the last 2 months, is LinkedIn. And in that regard, you are absolutely the Yoda to my Luke Skywalker, because I've been on LinkedIn for a while, but I didn't really use it until this year when I took up, inspired by you, the challenge to start posting every day. And I was just telling somebody in this, I could see him in the comments, Eric. Yeah, I'm going to call you out, Eric. I was having this conversation with him that LinkedIn is probably the most I mean, Bigger Pockets is not bad. LinkedIn is literally a thousand times more powerful. And I'm like, why have I not been using this amazing tool all this time? And just as an aside, relating to international investors, the very first thing, this is something that Richard told me, the very first thing that he does when people approach him is he jumps on social media to see what they look like, what their profile is. If he jumps on and he can't find anything, any trace of you, he's not doing business with you. And so being on LinkedIn, being on Facebook, being active, not being a jerk, being helpful, being a go-giver, these are things that these folks are looking for, and you can't start that 10 minutes before they start looking at you. You have to kind of be that and establish that runway so they can easily find you and be happy that they did. And so you were the one that got me using LinkedIn more effectively, and you're the one that got me connected to Bob Berg. one of my idols, the author of the co-author of The Go-Giver, and for that I will be eternally grateful. But I just have to say that for me, between the between LinkedIn and what I know about international investors, I'm set. If I didn't do anything but LinkedIn, there's plenty of people out there who want to invest in the U.S. and can now find me.
Wait until you discover TikTok. I'm
Well,
just kidding.
I've seen TikTok. I don't. You have to explain
I'm
TikTok to
just
me. I'm
kidding.
probably missing an opportunity there too.
No. What I wanted to say is, first of all, for everybody watching this, definitely go to our last week's episode with Bob Berg, who Mitch just mentioned. It was a very interesting conversation with Bob that we got to learn more about his story and background. And yeah, thank you so much. You on social media, you shared, I believe it was about a year ago, you said, if it's impossible to know what you're doing, or wait, you have one of these posts, and you posted this several times since. Is this? It's very interesting because I would say everybody who's looking to raise money, everybody who's in business and have clients or customers that are online in any way, if they can't tell what you're doing, that's going to be a problem. If people have to guess what you're doing, and if they don't understand that you're in real estate and you are in real estate, you're an operator, you're a sophisticated investor, even if you're a limited partner only, if you make that difficult to be known, then yeah, that's what sparked for me when you said shared that mention, and then you shared about Clubhouse, yada yada, and then I got back to LinkedIn. So thank you so much for inspiring me.
Oh, my pleasure. We inspired each other. We inspired each other. And I will just say, just briefly about LinkedIn, is that I don't just look to see people that are there. I kind of want to see what kind of people they are. Are they posting supportive comments, or are they jerks? Because I'm old enough now that I don't need to work with jerks. There's no amount of money in the world that's worth me working with people that I don't like. So if you're not the kind of person that I'm going to enjoy working with, or as Monique says, my wife says, enjoy doing life with, then you're not going to get into the circle. I'm not going to even bother trying to connect with you. But if you are the kind of person that I'd love to take a trip with or spend some time with, then I'll discover that when I look at your posts. I'll see what kind of person you are. Are you helpful? Are you encouraging? Are you supportive of other people? Do you only help people when it's of interest to you, versus just helping for the sake of helping, just because you can? And I love that about LinkedIn. BiggerPockets does that to some extent, but LinkedIn makes it really, really easy to see who's out there just for themselves and who's really out there to help other people. And those are my people. That's my tribe.
That's beautiful. And we're going to get back to the topic, but before I would like to share with we have some comments here earlier. We have Don and Enrique sharing, hello Sam, coming in loud and clear. Thank you. We had some technical difficulties, got that sorted. Cheryl was asking earlier, what was the name of the Facebook group again? I shared investor skill set training here from Capital Races Club on YouTube. It's not clickable unless you're on YouTube, but we can, in the show notes, we can leave that in the description after the chat. And if you happen to be on YouTube, you can click it and maybe share it on LinkedIn. Right now we have some Wi-Fi situations here, so we don't have the same support we usually have during the shows. We have Brian Spengenman sharing, great advice, Mitch. Social media seems great for real estate and tech startups. What about investment funds? This is interesting. What are your thoughts about investment funds and maybe private lending as well, because it's basically.
So about a year ago, so we've been using private money for a long, long time. And about a year ago, I started talking to private lenders who wanted to find ways to put their money to use. And I already have some investors who are looking to use those funds. So I started pairing those together. I started bringing private lenders and investors together. I collect a fee, I collect points, and I do this in places where I can do it legally. And what I discovered is, whether it's real estate or tech startup or investment funds, it's a pool of money, right? It's not about the money; it's about the people. And using social media is just another way for people to get to know who you are. And once they know who you are, then the floodgates open, or at least the floodgates can open, and then they could spend money on real estate or your tech startup or your investment funds. But it's not these aren't separate pools. We are whole human beings, and people want to know that the people that they're dealing with are real live people. They're not cardboard cutouts. And once they understand that, then you can have what I call the conversation, which is about whatever opportunity you're presenting to them. And if they have the funds, or if they know somebody who has the funds, then you've got the connection. They feel comfortable enough with you to share a piece of their network with you. So even if they don't directly invest, they may know a guy or a gal or somebody that is interested in looking for this. And the thing about what I do, I do real estate deals, but I'm not really in the real estate business, right? I'm in the network business. I'm in the networking business. My job is to help people solve problems that they have. And believe it or not, one of the problems that some people have is I know it sounds horrible. I got all this money. How do I put it to constructive use? I remember, I think it was Ron LeGrand that used to say a long, long time ago, I don't know if he still says it, there's only two money problems, too little and too much. And when he said that, I thought to my wife and I would look at each other and kind of snicker and go, how could you have too much money? But when you have a bunch of money and it's your job to put it to work constructively, that's a job. Last year, I had $200,000 of private lender money that I spent like 6 months trying to put to work. And every day I wake up in the morning and think, okay, where can I find a nice safe place to put this money so that this guy can earn the return that he wanted? And it was a struggle. And that's 200,000. Imagine if that were 200 million. Imagine how many days, every day that you don't invest that, you're losing money, and it's real money. We're not talking monopoly money, it's real money, and it can be calculated. So that's a lot of pressure. Every day that it's not going fully used, that's pressure. And so to the extent that you can help that person by finding a nice, safe place for them to put their money that's going to give them a quality return and make their lives better, you're doing them a favor. And it feels like they're doing you the favor by giving you the money, but it's mutually beneficial. And so investment funds, real estate, tech startups, it's all the same bucket. And it's all being initiated by people to people for personal reasons. The money by itself is useless. It's what people want to do with it. And so it is exactly the same thing. Now, the type of social media might vary. If I'm looking for investment funds, I may or may not go on Twitter. I may or may not go on TikTok. I'm sure Sam will tell me otherwise. But certainly, there's no argument against LinkedIn. If you're trying to get money, money lives on LinkedIn, and it's your job to speak its language and make yourself. It's like meeting a strange new dog. It's your job to stand there and let them sniff you a little bit and see if you're okay. And if you are okay, then you can reach out and pet them and so forth. So same thing with money on LinkedIn. It's there. There's so much. I mean, it's put your head between your legs kind of and take deep breaths, kind of overwhelming how much money there is out there looking for a safe place to sit and earn a return. The money is not the issue. The issue is that there's so many people out there who don't speak its language, who don't know how to treat it well, who don't respect the relationship between you as the borrower and them as the lender. And when you learn to respect that relationship and you treat money well, it comes back and it brings its friends. And before you know it, you're drowning in money. For me, money is not the obstacle. I'm trying to find deals right now. I'm trying to reach out to people constantly and say, what deals do you have? Because if I can get the deals, the money is not the challenge. The money is the easy part. It's finding quality deals and finding people who actually know what a deal is. That's the challenge. It is exactly the same thing. It's a good
That's
question, Brian.
we have a follow-up question. I think that's um, we can go with the follow-up question after going deeper on the previous topic, which was you said you're not focused on getting bank financing for your deals, and you have access to capital outside of banks. So, could you talk for our audience a little bit about how you said you had an example with Richard where he wanted to put money to work in the United States. He was able to do so with your help, with your colleagues' help. Could you walk us through that? Because we have in Capital Races Club, a lot of our audience is also outside of the United States. I myself, we're right now in Ecuador. We're in pretty much everywhere. But for all of us who are outside of the United States, looking to put our capital to work in the States, what are some ways we can go for funding or for financing a deal?
So let's talk about my favorite, which is probably seller financing. If you could find a seller in the US who has real estate, and let's just say, make it easy, that they own it free and clear. So, I don't know, $250,000 worth of real estate, they have no debt on it, they own it entirely. Let's say they're in their 70s and they just want, they've been, let's say it's a rental property, let's say it's a fourplex, doesn't matter. And they've been managing this thing for the last 20 years. It's been good to them, but they're tired. They want to sit on the beach and just relax. And there are quite a few people like that. Demographically speaking, those are baby boomers and they are retiring in droves. I think it's 11,000 are hitting the age of 65 every day. So that's happening. This is reality. If you were to go to that person and say, look, Mr. Seller, how about we buy your property for $250,000 in the following way? We'll pay you $25,000 up front, and then we'll pay you the balance, the $225,000 balance over the next, no, even better. We'll pay it at this following rate, $1,000 a month until paid in full. However long it takes us to pay it off, we'll pay, well, I guess it'll take 225 months at $1,000 a month. If that seller says, hey, $1,000 a month, that's not bad. That may be more cash flow than they were actually getting as a landlord. But now they're not a landlord anymore. Now they are the bank. So they get $25,000 up front. They get $1,000 a month that they don't have to chase after anybody for, because in Georgia, if I don't pay them their rent, they can evict me out in a month and change. So if I don't behave myself, there are lots of remedies that get me out and lose that property for me. So let's assume that they say yes to that. What has just happened there, for those of you who didn't catch it, is I bought that property from the seller. No bank was involved. They were the bank, basically. They're letting me pay them on their equity over time. And they're not checking my credit. They're not making me sign personal guarantees. We typically structure those as non-recourse loans. So if I don't behave, I don't perform, the worst thing they can do is take the property away from me. And if they did that, I'd lose my $25,000 in any payments that I'd made. But if I do that, I deserve to lose those things because I didn't honor my commitment. But it's a good deal for them because they get asking price. I'm not going to negotiate. I'm not going to try to get them down from $250,000. I'll happily pay the $250,000. But I'm in it for $25,000, 10%. And they get what they want. I get what I want. And here's the kicker. And I'll throw it out to your comments. How much interest am I paying on that deal that I just described? What's my interest rate? Anybody want to tell me? All you people in the comments? I'm paying $1,000 a month on the balance until paid in full. What's my interest? Okay, I don't want to take up too much time. My interest is zero. I just bought myself 0% loan for $225,000 for however long it takes me to pay that thing off. And I'll pay it off. I'll take the 225 months to pay it off happily because I have to pay him and his heirs. I'm paying 0%, folks. That's a 0% loan. How many of those deals could you do tomorrow if the cash flow on that fourplex is $2,000 or $2,500, so that you're making a profit on a property that you didn't have to go to a bank to purchase, and that you didn't? It's never going to show up on your credit report. It's never going to drag you down when you get ready to qualify for other loans because it's not going to show up. How many of those could you do? Now, am I saying that you can do those tomorrow? I mean, theoretically, yes. There's some learning you have to do. There's some training that's involved. And for the record, I don't sell the training. This is not a pitch for a course in seller financing. My only point is that conceptually speaking, we have done deals like that. In fact, we closed a deal like that a year ago. Actually, 2 deals like that. 0% financing. The seller was delighted because we converted him from a landlord to a bank. He got payment like clockwork. And in his case, we actually paid him in advance. We paid him early, which means we went back to him and said, hey, we're going to pay you early. We'd like a discount on what we paid you. We promised we'd pay you this, but we're paying you a couple of years early. Can we get a discount? And he said yes. So not only did we get 0% interest, we got a discounted payoff when we paid it. I mean, you can't do this stuff with banks. No bank out there, at least not in the US, is going to give you 0% financing. No bank is going to do this without personal guarantees. No bank is going to discount the payment unless it's a short sale. So these things cannot be done under normal bank circumstances. They can be done easily with seller financing. I'll just briefly touch on Cheryl's question about zero money down. We've done zero money down deals. I will say this, unless you do your analysis properly, there's some deals that even at zero money down, it's a bad deal. That's a lesson that we learned about doing our numbers, is that just having a zero money down deal doesn't mean it's a good deal. You still have to do your analysis to make sure that the deal makes sense. But yes, zero money down deals are a thing. We've done, I don't say this out loud because no one believes us. We've done deals where the sellers paid us to do the deal. Well, they brought money to the closing and gave it to us so that we could close for them. So, but I guess if there's one takeaway that I want people to carry from this, it's not that there's all these exotic strategies for buying. It's that all of these hinge upon your ability to analyze a deal. If you can't analyze a deal, none of this stuff will be available to you. These are sophisticated techniques, and they assume that you can actually run your numbers and that they make sense. Just because you can get a deal for zero down doesn't mean that you're going to make money off of it. And so this is not a license, and that's why I don't talk about these a lot, because in the wrong hands, it's just a faster way to dig your own grave. It's a steam shovel instead of a regular shovel to dig your own grave. So it's not a license to not have to understand how the numbers work and how the finances are structured. But it is a tool for those people who don't have a ton of money to put into a deal to get started now. And when people come to me and say, oh, I'd love to invest, but I don't have any money, that's an excuse. That if you found me a great deal, I guarantee you can get that deal done without a penny out of your pocket immediately. And if anyone is listening, anyone from the sound of my voice that has some great deals, by all means, bring them to me, connect with me on LinkedIn. I'm happy to talk to you about it. But yeah, seller financing is easily one of the most powerful tools that I've ever seen in 20 some odd years. Perhaps rivaled only by things like 1031 exchanges and self-directed IRAs, but there's a lot of powerful stuff out there that you don't see in the conventional wisdom about buying investment real estate.
I think a lot of minds were just blown. They haven't maybe had these kind of conversations before. Can we touch on the subject of why is this not something that's widespread? Why is, you mentioned briefly, you said in one sentence, you said banks may not want you to know this. But what are some other thoughts on why aren't everybody aware of seller financing, no money down kind of loans from the owners, or any sub to?
Well, it's a fair question, and it's similar to the question, why when you open up a self-directed an IRA, why aren't you told that you can invest in real assets in your IRA? Why isn't that more widely known? People who have 401ks, why aren't they told that they can, when they retire, they can convert that 401k into a self-directed IRA and then start lending it out for real estate transactions? And the answer, I think, or at least one of the answers, is the same reason that Money Magazine is stuffed full of ads for brokerage firms and mutual funds, because that's where the money is. There's no money to be made by banks if everybody were to do seller financing, and everybody shouldn't do seller financing. Some people, it is a sophisticated technique. You shouldn't do it unless you're fully trained to do it. But for those of us who are, I don't ever intend to go to a bank to get funding for residential, personal, commercial. Why would I? There's no need to. And so I won't say it's a conspiracy. I'll just say the information is there for those who want it, but few people even realize that it's even possible. And so they don't even know that they should be asking the question, can I get property without going through a bank? And then just to be clear, I want to be very clear on this one, because someone asked me this a couple of days ago. They said, well, a lot of the seller financing stuff, the interest rate is not much better than you can get from a bank. Banks right now are, 3 and change, maybe 4% rate. And that's true, and I'm not going to pick on any particular bank, but let me just say this. In 2007, when banks were teetering on the brink and many banks collapsed, many banks went down with the Great Recession. Georgia saw many, many, many banks fail. When that happened, I saw banks yanking lines of credit. In fact, I didn't see that. We had banks yank our line of credit. So you had a line of credit and they said, you know what? We're not sure we're on stable financial ground. We're going to shut your credit down and make you start paying it all back now. Surprise. And personal guarantee means if all else fails, you don't just lose the piece of real estate. They can come after you personally for any of your assets that they need to make themselves whole. That's the big reason why I don't like dealing with banks. Even if interest rates were identical, 2 deals, seller financed and bank financed, exact same interest rates, if they're requiring a personal guarantee on the bank note, which they almost always do, any mortgage that you get, any residential mortgage you get, or even investment mortgage you get, is going to have a personal guarantee. I'm not interested. I'm interested in only situations where if things go sideways and horribly wrong, the worst thing that can happen is that they'll take the property away from me, which I don't want, but it's better than they take the property away from me and they can chase after all my assets until they're made whole. And when banks get nervous, they protect themselves first, and the rest of us are left on our own. And I've seen it with my own eyes. And so I don't rely on banks. And I want to be in a situation where if things get ugly, I can protect myself and my private lenders and my investors, and not have to rely on, is the bank going to do the right thing for me? Because they're probably not.
I really like the way that you describe it, because earlier in the show you said, or you shared briefly, that it's a non-recourse loan. Could you touch on that just for people who have not heard recourse or non-recourse, the importance of getting non-recourse loans if you are going the traditional bank route?
Well, so if you're going the traditional bank route, you don't have an option. They're going to require that you sign a personal guarantee for that loan, in addition to the security interest that you're going to provide them in the property. So in Georgia, you'll sign a note committing you to making the payment. You'll pledge the asset in a security deed, and you'll sign a personal guarantee. So they're protected 3 different ways. And you won't have the option of going to the bank and saying, you know what, I really don't want to sign this personal guarantee, because then they're going to say, well, then we really don't want to give you the mortgage. So you don't have an option. When you're dealing with an individual, the individual is more than just happy to get their property back, because that's where we started in the first place. You had the property, I have the money. If I don't honor my commitment and pay you like I said I was going to, you should have the right to take the property back. And that's exactly what non-recourse says. It says the only recourse you have is to take the property, not to go after my personal assets. And honestly, banks don't need this, but they've made it the norm. They've made it the standard. So we all just kind of accept that that's the way it is. Those of y'all who get bank loans. And so that's just the way it is. But when you're dealing with an individual, my comment to them is, hey, look, if I don't honor my commitment, you should get to keep my down payment. In the example we just gave, they would keep that $25,000. So I would have just paid, if I close this transaction today and default tomorrow, they get to keep my $25,000 forever. That's gone. And they get the property back. So they can turn around the day after tomorrow and do the exact same thing with somebody else and collect another $25,000. So they actually make more money if I default than if I don't. So they don't need a personal guarantee, and I'm not giving them one. They get the property back and they get to keep my down payment and any payments that I made. So to me, that's inherently fair. Banks don't want fair. Banks want the competitive advantage. So they get fair and then they go the extra step and say, well, plus if we can't get made whole, we can chase after your assets and take what you own so that we can be okay even if you're not. And to my mind, that's not a relationship that I want. So that is why I'm not a huge fan of it. Am I suggesting that people shouldn't get loans? No, I'm just suggesting that if you're an investor, you need to understand how seller financing works, because it is a powerful tool. If you're in the lifting bags of cement business, you might want to look into a forklift. I mean, yes, you can do it by schlepping 100-pound bags of cement on your back, But maybe I can introduce you to this idea of a forklift, and maybe you can introduce that to your business. That might do good things for you and your back. So same thing with seller financing. It's just an incredibly powerful tool. Can it hurt you if you don't know how to use it wisely? Yeah, just like a forklift can. But if you use it well and wisely, it's magic. To this day, when I talk to people about seller financing, I get giddy because to me, the fact that it's even possible is magic to me. It's like Harry Potter stuff, but it is real. We've done it. Again, we didn't invent it. There were people doing it decades before we got involved in it, but you hear very little of it now. And to your point, I don't think it's an accident, but it's there. It's doable. Any good closing attorney will happily explain to you how it works. You close just like you would a normal transaction. It's an attorney closing. You get title insurance. You provide all the protections that you would to a bank, except instead of being a bank, it's to the individual that sold you the property. They're just as secure. They're just as protected. And in places like Georgia, where you can foreclose in a month, they wish you would default because they would make a ton more money that way. But it makes it really easy to structure those deals. And if you calculate the numbers, when you're only putting 10% down, your cash on cash return goes through the roof because your investment is tiny, and your risk exposure is minimal, and it's not showing up in your credit report. So if you ever did decide that you wanted to get bank loan, your credit is pristine because it doesn't have 15 loans on it of all the investment properties that you have. It's kept clear for the things that you might really want to use your credit for.
This is, like you said earlier too, that it's not an investment method that is heavily used outside of US. It's not even heavily used in US, even though we've had this now for quite some time. For those that are watching this and in Capital Races Club, definitely go to Capital Races Club YouTube, subscribe, go to our page too and follow. But for all of you all who are outside of the States and looking to place capital to work in the United States markets and aren't aware of seller financing, brokering your deals in a way where you don't need to use a bank for security. Mitch, please share with our community here, where can we find out about your group, this legendary Facebook group that I've been part of now for a while? Where can our members and audience find out more?
Yeah, so if you search in Facebook for a real estate investor skill set training group, you'll find us. There's no cost to join the group. Honestly, I created. Oh, thank you. You posted it in the comments. I created the group for one reason, and that was to find more people that I could do joint venture deals with, because I was having a hard time. As I said before, the challenge for me is finding deals, and I'm only in one at any given time. I'm only in one geographic market physically. I may be looking at other markets, but the people who are living in those. I talked to somebody today who's in Charlotte, North Carolina. I know that's a hot market, but I'm not physically in Charlotte. They are. They're going to see deals that I'll never see. And rather than try to duplicate their efforts, why not just partner with them and joint venture with deals that they can find that I can sell to my international investors, and we can split the wholesale fee. I'm fine with taking a portion and having everybody eat, or having everybody succeed and everybody benefit, because that's the way that works the best, and it's the most fun for me. For me, business is definitely a team sport. No one that I know that's successful does it on their own, and the strength of your team dictates the extent of your success. And so, to the extent that you can get qualified, trained, transparent, capable, honest people on your team, you're going to be able to take down deals that you could never take down by yourself. And I needed to create more people like that, or find more people like that, and that's why the skill set group exists. For those people who don't know how to analyze a deal, I'll teach them, because they need to understand that before I can do any deals with them. But I teach them for the purpose of doing deals. The teaching is, for me, just a means to the end of them doing deals. And when they're doing deals and we're doing deals, then we can start talking about bigger deals and more exciting deals. And there's always another thing to learn. And there's tons in real estate that I don't know. There's so many areas that I'm not an expert in that I'd love to learn more about. I'm trying to learn more now about healthcare real estate. I'm trying to learn more about syndications. I was just approached to perhaps participate in a syndication. So I'm trying my best to learn as much as I can, and I'm leaning on my network to help teach me stuff like how to use LinkedIn more effectively, because nobody's an expert in everything, and you shouldn't be. And I am not. It had not been in my nature to ask for help. I am actively trying to counter that instinct because I know that whenever I ask for help, I get tons more success than when I don't. And I know it's not just me. And also, I think we all need to think bigger and better. And how can I do what I'm doing and help myself, but also help other people? There's tons of problems out there in the world. How can we use our talents and our services and our skills for good? How can we help each other be successful and then use that success to help make this world better? I saw what I think it was Airbnb had donated 100,000 rooms or 100,000 beds for the Lithuanian refugees, and I thought that's cool. How cool is it to be able to mix social giving with corporate success in a way that benefits all parties and certainly gives them a little PR boost. And the people who are getting the places to stay don't care about the PR boost that Airbnb is getting. They care they have a nice, safe place to stay. And to me, that's a win all the way around.
Yeah, it's fascinating. And read a tweet from Elon Musk showing Starlink Wi-Fi for the Ukrainian situation.
Yeah, I saw that.
So yeah, you're absolutely right. You can do a lot with that kind of. Speaking of which, social media. We had a question earlier, Eric. We did not forget about you. We just wanted to cover the financial part first. So Eric asked, how do you create a balance between posting personal and business on social media platforms?
So Eric is messing with me because Eric and I had this conversation just this morning about this very topic. So thank you, Eric, for putting that. He's not a plant. I didn't ask him to post that. And I'll say to him, I'll say now what I said to him, which is that, and I think you would agree with this, Samson. The most viral, the most powerful, the most viewed posts on LinkedIn aren't about the technical stuff. They're not about business and making money. They're about personal things. I'm 7 years sober, or my cat passed away, or I have friends who are in a war zone and we're trying to get them out. That's what people care about. The money, it's important, but it's not. It doesn't. No one. I'll put it this way: we're all looking for connection, and we're all looking for meaning and significance, and we only get that from the personal. I mean, the news is full of people who are who are successful financially, who are miserable. What gives our lives meaning is our ability to connect with each other and help each other. And one of the ways that we can do that is to be honest about who we are and what we stand for and what's important to us. And so I think expressing that in personal posts on platforms like LinkedIn, where I consider it to be a relatively safe place for that, doesn't you think that would hurt your business credentials, but it doesn't. In fact, if anything, it raises your your social media presence, because people pay attention, first of all, and they're honored and impressed that you're brave enough to put yourself out there. And as it is, if you are an alcoholic and you've been going 7 years sober, then that's an accomplishment. I think we can all acknowledge that that's a huge accomplishment, and we're not going to look at that person and go, "Oh, they're an alcoholic." We're going to go, "They're an alcoholic, and they're 7 years sober." That's a story worth worth trumpeting. And so, should your entire feed be personal stuff? Probably not. Probably not appropriate on LinkedIn. But putting the occasional personal post that speaks to who you are as a human being, I only see that as a win. And if it's authentic and not calculated, then even better. I think people respond to people. I mean, this business. That's why I don't make a distinction between real estate and technology and startup. It's people in business. And if you are authentic and genuine with people, then they'll open up to you. And if money is involved, then they'll open up their wallets to you, and they'll trust you with their finances. So I don't think that you lose any points by being authentic. One of my favorite authors is Brene Brown, and in her, I think it's her TED Talk, she talks about how she had a breakdown, and she doesn't put quotes around it. She talks about it as a legitimate breakdown. And you'd think that from a business standpoint, admitting that you had a breakdown publicly is a bad thing, but she is a world-renowned presenter and author and researcher, and she has picked up an audience, myself included, because she is so authentic and honest about who she is and what she thinks is important. I just want to comment real fast. I know we're running out of time, but Cheryl asked a question that I see often when we talk about seller financing, or subject to, or any of the strategies that are different than the norm, which is, why would anybody do that? And the answer to that question is twofold. One, there's a million reasons, but the most important reason is because they wanted to. I mean, at the end of the day, that's the only reason why anybody does anything. At no point have we ever forced anybody to take one of our deals. We made an offer and they accepted it. And they could have said no. We didn't help. No guns were involved. No hostages were taken. They did these deals because they were the best available option for them. And what I didn't say is that in the deal that we had done, where the landlord had sold us 2 properties with 0% financing, is that he had 2 tenants that weren't paying him. So he had gone months without getting any revenue from these tenants. So he was just tired. He wanted to be done with the whole thing and walk. And when you get to that point where you just want out, you'll do whatever you have to do to get free. I get this from subject to people. Why would anyone ever give you their house and leave all that equity behind? Because they're done. They're done. They're tired of dealing with this house, or it has, their spouse passed away, and the house represents pain and suffering and sadness for them, and they just want to be done with it as fast as possible. There are scenarios out there in the world where the most important thing is not maximizing revenue. Sometimes it's, how fast can I get this thing gone? In one case where a guy, he had divorced his wife, and part of the divorce decree was that he had to sell the house and give her half, and he had to do it by a certain date. And if he hadn't done it by that date, he was going to jail. And it was like days away, and he was highly motivated to get this thing closed because he didn't want to go to jail. So he didn't care about price. Price was not his motivator. His motivator was, I need to get this thing closed so I don't have to go to jail. So price is not the only reason why people do transactions. Interest rate is not the most important thing for a lot of people. And if in the example I used before, just move fast. I said $1,000, we make a payment to you for $1,000 a month. If they had demanded that we pay them interest, it would have still been $1,000 a month payment. It just would have been some portion of that principal and some portion of it interest. So it wouldn't have increased the amount of money they would have gotten. We just would have called some of it interest, and the rest would have been principal. So it doesn't change the financials. It's still $1,000 going out the door. He doesn't get any more money. He just gets, he gets more money over time eventually, but he doesn't dramatically destroy our deal because we have to pay them interest. But most people don't care about interest. They care about, how much money am I going to get in my hands? And if you're 70 years old and you think you got a good 20 years left, what do you care what happens after year 20? Money is not the only important thing out there, and people should not try to say no for the other person. Make the offer, let them tell you what they don't like about it, and then adjust accordingly. You'd be surprised what people will agree to without any coercion, without any hostage taking or arm twisting, because what they think is important and what you think is important are 2 different things.
That's fantastic note too. We have so many things that we could still unpack here, Mitch. It's wow.
You and I could talk all day long.
For everyone, for all of y'all in the comments, definitely put in any feedback, any takeaways that you found very insightful. There were a lot of things here. So definitely also share it with your friends. It's easily shareable on LinkedIn, on Twitter, on YouTube. So just click that share button and tag your friends in it. And that way you can share the wealth. This is a Go-Giving community now. And as Mitch mentioned, we're here to create relationships. So definitely do that by sharing it and commenting. Mitch, what what thought would you like to leave Capital Races Club with today? Any kind of words of wisdom or any book recommendations or anything that you'd like to leave us with before we go to your contact details?
Well, first of all, I want to thank you for inviting me on. I've had fun, as always. I could talk to you all day, and sometimes we have. At some point, we'll actually get a chance to share a meal or two and some physical space. I thank all the people who came here that I invited. I'm glad that you guys were able to show up. Hopefully, you got some value out of this. And I'll just say this, and it's not something that it's something that I'm being taught by people like Sam, that the power that we all have within us is the ability to connect with each other. This is the go-giver mentality, to pull Bob Berg back in here. And it's crazy how powerful that is. Just that simple act of asking people how you can help them and not worrying so much about how you get paid. Just the fact, I help people because I can. To me, that's the cool thing about it. I don't have to get paid to help somebody. Just help them. If you can help them, help them. And if you do that enough times, as I say often, I've tried to outgive the universe and see if I can be more generous to it than it can be to me. And every time I do that, I lose. And it's not even close. It's embarrassing how overwhelming the response is whenever I give a little bit, so much so that I'm ashamed to give, because I know I'm going to get 10 times back. And I don't know why people are so resistant to this idea, because all you have to do is try it. If you try it for a week or two, just giving and not worrying about how you're going to get, just try it for a week and see what happens. Your life will be transformed. That is the key to any success that I have ever gotten. And whenever I feel low or depressed, I just start giving. And not only do I feel better, but within days, opportunities come at me in so many different ways that it literally is embarrassing. I feel badly about it, but I don't know how to fix it. It's just the way the universe works, and I don't know why more people don't try it. But if you haven't tried it yet and you're struggling, give it a shot. I can guarantee you that you will see what I'm seeing, which is that for every kind act that you try to put out there selflessly, the universe will reward you tenfold, and you'll come back to me hopefully and tell me that you have become a go-giver like Samson, like Cecilia, like I try to be, because like Eric, like a lot of the people that I see on this call, they're part of my tribe because they're those kinds of people, and we're making this little community, and I'd like to believe that we're making the world better. To me, at the end of the day, that's what matters. We spent a lot of the last 3 years caring for my mother-in-law, who passed away in June. And being that close to people at the end of their life reminds you what's important and what's not important. And accumulating stuff is not important. Making connections with other people is all that matters in the end. That's all you have in the end. And so you should make them count.
That's a powerful message. I'm gonna put in the link, a link in the description here, where you can actually give to the Ukrainian situation right now that's happening. Very relevant. At the same time, you will receive a ticket to a LinkedIn masterclass by 5 legends of LinkedIn that I look up to heavily. So that's a gift for all of you all who are here in Capital Races Club. It's not run by me, but it's a good buddy of mine. So definitely go to her page and check it out. Mitch, how can we connect with you? We definitely want to connect with you. I think everybody on planet Earth wants to connect with you. I've seen.
I hope so. The best way to connect with me is on LinkedIn. You can follow me. You can connect with me directly. I will connect with any and everybody, as long as you're a real life person and not a bot. And just when we connect, I'm going to be asking you about what your goals are, and I'm going to be expecting you to not only receive whatever benefits that I can offer, but that you can share that with your network, and you can help us all make the world better. I know it sounds corny, but if we don't do it, who's gonna do it? We have the ability to do it, and it would be a shame if we didn't take this incredible resource that we can connect with. I feel like I know Samson and Cecilia. We've never physically been in the same space yet. That'll change this year. But the fact that we can make connections with people that are halfway around the world is a blessing that our forefathers didn't have. And the fact that we have that means we should do something constructive with it and make it a connection that benefits the world. And I think that, to me, that's the cool part. So LinkedIn is the way to reach me.
This has been, I can't say this, but I think we all know what I was about to say. Thank you so much for being here, Mitch, and
Thank you for
see you
having
all
me.
next Thursday.
Bye, folks.
I appreciate you. Definitely feel free to subscribe to our YouTube channel. That helps us Capital Raisers Club out a whole lot. Go to linkedin.com /IN/Mitch Messer, and it's typed just as he types his name, so Mitch Messer. If you're listening to this, you don't have the video, go to YouTube, search for Mitch Messer. This should rank pretty high, I think. We're going to do our best on our end to make sure that if you search for Mitch Messer, you should find this episode. So thank you all for being here, and see you all next week. Thank you.
Samson, thanks so much.